Toronto condo investors and owners are starting to lose a lot of money. Let's dive into the story right now. What's going on, guys? Welcome back to the channel. My name is Matt, and there's definitely a concerning trend that I want to talk about today. And this has been starting to make headlines on different social media platforms and maybe on the mainstream news. And it's the financial struggles that are faced by a lot of new condo investors in the greater Toronto area, and maybe more specifically Toronto and downtown Toronto. So a recent report has revealed that a vast majority of new condo investors around the greater Toronto area are losing money every single month. This might come as a shock to many, especially those who have always seen Toronto's real estate market as this gold mine of an investment that always goes up, okay? According to the data, these investors are facing negative cash flow, and it's getting worse. That means their rental income isn't enough to cover their mortgage costs, property taxes, maintenance fees, and it's a tough spot for them to be in, especially when you consider the high property prices and the rising interest rates. So the main reason for this is definitely the high cost of owning a condo compared to the rental income that property actually generates. With mortgage rates climbing and going up, the monthly payments are higher than ever. On top of that, property taxes and maintenance fees add to the burden, leaving many investors in the red, okay, deeply in the red, deeply cash flow negative. What does this mean for the future of the condo market in Toronto? It could lead to a slowdown in new condo investments as potential buyers become weary of the financial risks. And on the flip side, it also might result in more rental properties hitting the market as current investors try to offload their units, right? And we're going to see higher and higher levels of inventory of condos in the GTA. So if you're actually considering investing in a condo, so here are a few tips to help make the situation better and to keep in mind. First, make sure you do your homework, right? So research the market thoroughly. Understand that, let's say if you do buy a condo right now and you rent it out, or I would say mostly the opportunity is there for people that are probably going to live in the condo themselves, okay? Because if you're going to buy this and rent it out, you're still not going to make money. You're still going to be buying at a relatively high price, and then you're still going to be cash flow negative. So I think the opportunity lies in maybe people that want to just buy for themselves, right? First-time home buyers that want to just own a condo and don't want to rent anymore. I think that's where the opportunity lies for people. It's also worth noting that the current market conditions might change, right? So the real estate market is always evolving, as we know, with all the different economic things that happen on a week-to-week basis. There are risks, but there's also opportunities. So for example, one potential opportunity is the possibility of price corrections in the Toronto condo market. If prices stabilize or decrease slightly, it could create more favorable conditions for new investors. Additionally, as more investors face negative cash flow and look to sell, there might be opportunities to acquire properties at even lower prices, maybe 1 year, maybe a year and a half, or 2 years from now. Another aspect to consider is the potential for rental demand to increase, okay? So with the ongoing housing affordability issues in Toronto, more people might opt to rent than to buy right now. As we're seeing right now, the rental market has just been going through the roof. This could actually eventually lead to higher rental incomes, improving the financial outlook for condo investors, right? So this may happen down the road. I don't think this is going to happen relatively soon. It's important to remain patient and not make crazy decisions based on short-term market fluctuations. Real estate investment is definitely a long-term game. It's not a short-term game by any means. And I think what happened with a lot of these investors is a lot of them were speculating. A lot of them were buying multiple units. Maybe they bought one or two and they did really well, so they levered those properties to buy a third one or a fourth one or a fifth one. And now they're sitting on a lot of debt that's going, maybe variable debt that's obviously increased a lot, and their interest payments and property taxes, everything are just too high compared to the rental income that they get from that property. And so I expect to see a lot more condos hitting the market. I expect to see more inventory over the next year. And so I think there's opportunities for first-time buyers in the condo market. I think the investors are unloading, the prices are going to come down, the inventory is going to go up, and it's going to provide some great opportunities for people who want to own a condo for themselves, right? A lot of people just they don't want to buy a house, right? A lot of people just want a place that they own, that they don't have to pay rent for every month. even though they do pay a maintenance fee, they own that unit and they don't have to worry about getting evicted or getting kicked out of the property if the owner wants to sell it, right? Some people just want that stability. Even in the city, even with a condo, they want that stability. And so this condo flush and this condo inventory buildup is going to provide some really good opportunities for first-time home buyers, in my opinion. And so I think it's a super interesting time. And to really explore just how crazy this is, let's dive into some numbers. So rising costs have left 82% of investors in newly completed condos who have a mortgage as cash flow negative in the first half of 2024. So 82% of investors are cash flow negative, okay? And that's a report that was released on Thursday. So in dollar terms, investors who closed on a condo in 2023 had an average negative monthly cash flow of $597, or roughly $600 a month, up from around $223 from those who closed in 2022. So while investors who got their condos in 2021 and 2020 were still on average making a bit of monthly profit, of those who closed last year, about 30% are losing more than $1,000 per month. Okay, per month. They're losing 12 grand per year on these units, right? And obviously these people, they rushed into the market. They were speculating. Low interest rates definitely helped the situation. And so now these higher interest rates are really putting pressure on these investors, people who hold these units. And what this is also doing, and I watched a video from Ron Butler, who's obviously great, and a lot of people probably know who he is, but he was saying that now that there's no new condo starts in Toronto right now because the units that are on the market, or a lot of projects that are still selling, aren't selling. They're not selling what they have. So what that means is that a lot of people who are in the construction business are going to be out of work after they finish their current projects, because if there's no new condo starts, no new building starts and project starts, a lot of people are going to be out of a job and they're not going to be working on those units, all of those tradespeople. So this is it's a scary time right now, especially in that condo market in Toronto. Like, these are numbers and these are stats that I've never seen in my life and that are brand new to people's eyes. And so we'll definitely keep you updated on this channel about the condo market, about the GTA, and how that's going to evolve over time. So if you guys enjoyed the video, please hit the like button. Really helps me push this kind of content to a new audience who might really benefit from the information. And until the next video, guys, take care.